Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar continues its decline, marking a fourth consecutive week in the red, as the US dollar index holds near the 11-week high of 104.36. However, given the bullish divergence signal from both the RSI and the MACD, traders should stay alert for a potential rebound and adjust their risk strategies to navigate anticipated volatility, as this week's market-sensitive events include the former President Trump and Vice President Harris polling closely in critical swing states before the November 5th election. The Fed's upcoming monetary policy decision on November the 7th is expected to keep investors on edge as they look to this week's economic lineup, which includes the JOLTS job openings, the ADP non-farm employment change, advanced GDP quarter, the Fed's preferred inflation gauge, which is the core PCE price index, and unemployment claims, along with that with average hourly earnings, and the key event, the non-farm employment change or non-farm payrolls this week. Each of these indicators could shape up expectations for the Federal Reserve's rate cut trajectory. Meanwhile, in Australia, key inflation data is set for release on Wednesday, including the CPI quarter and year-on-year. Along with that, the trimmed mean CPIs, and China will also be releasing its manufacturing PMI and non-manufacturing PMI, providing fresh insight into the region's economic momentum. So as the technicals are a little bit to the weaker side, let's see how the market plays closer towards the bottom side of this range, seen around 65 to 65.70. If we see a bounce from there, then we could expect to see the market re-challenge the topside area around 66.45, or even where the 60-day moving average is around 67.1020, which is a key point. The euro also taking a bit of a mixed turn. After a bounce on Thursday, the market gives back some of those gains and now looks into a wave restart for this week. Nevertheless, bullish divergence is clearly evident, and therefore I do anticipate the market may bounce from the region of 107.70 and look on towards 108.60-65, or maybe even higher. I like the way this MACD is also shaping up and therefore could see the bounce, so keep an eye on it. And as I always mention, traders should reassess their risk strategies, as the rebound could be sharp and quick. Now, backing down when it comes to dollar yen, the market pushes higher. I'm still in a neutral stance and awaiting potential opportunities, and therefore looking to the resistance somewhere around the 153.80-90. Let's see if we get a rejection from there like we did previously back in July, August, and if so, the market should look back towards 149 and reassess. Sterling now wavers after taking the challenge to the top side and finding resistance close around 129.80-85. Nevertheless, the divergence here is still quite strong, so therefore any movement towards this base seen around 128.40-50 should coincide with an ambush from the bulls, and let's see if the market can rebound and head on towards 130 as a broader call. Turning to commodities, the market is a little bit weaker since the engulfing candle and also a hanging man and also declining technicals could put a weaker start to this week and look towards a region of somewhere around 2018, or where the base holds around 2,700. Reassess from there as we could see a bounce and look on towards 2,750 or maybe on to 2,800. Wrapping up with oil, the market gaps down and now finds somewhat a mixed play to the start of this week. I do view that the gap could be filled, but before that, we may see one more down test towards the region of $68 a barrel or 66.5, and then expect to see the gap filled up to $70.60 and maybe even push on towards 71, 70.80. Well, that's a wrap. Thank you for joining me, and as always, look out for the interest rate report. I hope you enjoy the great start to the new week.